European stock markets are staging a bit of a rebound at the moment, with the UK's FTSE 100 index up about 35 points, while the Euro Stoxx 50 index is higher by 10 points. The DAX in Germany is up 43 points at the moment. Currency pairs are a little bit weaker, and in the peripheral bond market space, both Italian and Spanish bond yields are stable. And in the commodity space, all precious metals are taking higher, as is oil. Good morning, I'm Ishaq Siddiqi. It's Friday, the best day of the week, as you guys all know. And I'm going to give you a quick rundown of what's going on in financial markets today. So, overnight, we had a recovery in the US market and in Asian markets. Now, we started seeing a bit of a recovery yesterday in the European trade. We had a heavy sell-off for the course of the week, and that sell-off really kicked in early Thursday. By the afternoon trade, European stock indices paired much of their losses for the day and closed still in the red, but at the same time did show good character. And that was on the back of some investors coming into the market at a lower price given the sell-off. So bargain hunters were sieving through the wreckage and picking up stocks on the cheap. And at the same time, we also had positive data out of the US. We had retail sales, which were much better than expected, and weekly jobless claims, which also fell. Now, those two good data points from the US did suggest that the Federal Reserve has a bolder case to taper quantitative easing. But during the US session, we had a report out from the Wall Street Journal by their prominent Fed watcher, John Hilsenrath, who wrote a report suggesting that the Federal Reserve are trying to downplay the market's overreaction to any immediate withdrawal of quantitative easing. He said that the Fed is unlikely to withdraw quantitative easing all at once, and it's going to be a reduction of the pace of quantitative easing over a period of time. And more importantly, Hilsenrath indicated that the Federal Reserve, even after tapering of quantitative easing, will maintain ultra-low rates, possibly up till 2015, like they've said, and the chances of rates to stick around beyond 2015. So that soothed some of the market's concerns about Fed policy. However, investors are still unsure and would rather wait for the Fed's policy meeting next Wednesday to get a better idea from the Federal Reserve themselves and Ben Bernanke, who on the 22nd of May did spark a big fear in the market that we are going to see an exit of QE as early as September with his testimony and the Federal Reserve meeting minutes. So up until Wednesday, we are expecting a bit of volatility in the market. Today, we are seeing a recovery in Europe, and again, that's mostly on the back of that report by the Wall Street Journal, driving prices higher. We've got US economic data out later on, the Michigan confidence report and industrial output. Again, both will be used as a gauge to guess the Fed's next move, and investors will be paying hot attention to that. In Europe, we haven't had much data. We've just had inflation coming in from the Eurozone, which came at about 1.4%. So a bit of a normalization on the inflation front, suggesting that the ECB does have flexibility to stimulate the economy with conventional and unconventional policy tools such as negative deposit rates or interest rate cuts. Other than that, not much else going on. There's a bit of volatility in the market. It is the end of the week, and investors are taking on a bit of risk after this week's hefty sell-off. Thanks for watching your Daily Market Bite. Have a good weekend.